Hey guys, what's up? Alec back with the daily stock market, and I hope you are excited because we have an amazing week of trading ahead of us. I am hoping to see a green week, and I think we will see a green week with all the news. And like I said in my last video, we are in a sensitive stock market right now, so any little news can trigger the market to go bear and go down, or it can trigger it to go up. And also get excited because we have the most favorite video on the channel. It's going to be 10 to 15 different stocks to be watching out for this week with price points and price targets. So remember, price points, price alerts is where you want to get in at. We can even call them buy alerts. So it's going to be with buy alerts, and it's going to be also with price targets, which is the sell point. So I'm going to go over some of the top stocks that you guys personally recommended. And a lot of people only do like 2 or 3 different stocks. I like to do 10 to 15 because a lot of you guys invest into different stocks. And if I only do 2 to 3, unfortunately, I probably wouldn't touch on the one that you guys want me to talk about. So that's why I do about 10 to 15. So I talk about the stock that you want me to talk about. Also, if you aren't following my Instagram yet, follow me there so you can be a part of recommending me stocks, which ones you want to watch. I do polls all the time and engage with you guys constantly. Last up that we have to talk about in the intro is how good we are doing in the last 3 months. Look at that, 21%, $6,000 up. And if you look at the last year, we're up 94%. So we're seeing a straight shot up right now. And I don't want to go back to where we were at March 6th and March 7th. I'm sure you guys all remember that. Everyone's account was struggling, but then we had a huge days to make up for it. If you see like right in this time frame from March 8th to March 10th into March 12th, it was just basically a straight shot up at that point. Now it's adjusting a little bit and coming back down. Some people are bullish, some people are bearish. I'm definitely bullish right now, and I'm probably going to be taking out options next week. So if you are a fan of the options video, make sure you are watching the videos next week. And I typically upload between 4 and 5 videos a week. So the more love you guys show on the videos, comments, likes, the more I will be uploading. So just keep liking these videos and I will keep making them for you guys. But let's get right into the video. All right, so the first one we're going to be talking about today is going to be Amazon. Amazon.com, ticker symbol AMZN. We all know them. We all love them. And they're down 7% in the last week. And they even hit 2,900 at one point. So if you are a subscriber of the channel, you know I talk about Amazon below 30.50. So it's right at the breaking point right now. So right at 30.50 or lower is going to be a buy for me. And this is definitely one of those long-term holds. If you can buy fractional shares, this should definitely be on your list because you can buy $50, $100 of Amazon at a time. You don't have to buy the whole 3,000. But the great thing about Amazon is, in my opinion, they are going to be splitting very soon. And that's going to propel them to new all-time highs. And they can go up crazy percentages because of the hype. Everyone will see Amazon. They can buy it for $200, $300 a share, and it's going to be a lot less intimidating rather than buying them at $3,000 a share. So I would, if you're buying this one, I would probably be holding it for 1 to 2 years and waiting for that split to happen so you can actually benefit very strong. All right, so the next one we have up is Apple. It's a great long-term hold. Also, under $120, I think it's a sweet deal. It's right at the resistance. Now, in my opinion, it can go as low as 115. So if it does go that low, definitely watch out for that. I also probably want to run an option on Apple on Monday, especially if it goes as low as 115, then I will definitely be running an option. So stay tuned for that and stay tuned for the full video next week. I think that this one can get back to an all-time high. So I'll probably be exiting around $150 a share, which I think is definitely realistic in the next 3 to 6 months for it to go up about 20-30%. So definitely be watching out for that. And knowing Apple, it can probably go up a lot sooner than that. Also, I have about $1,100 in my market value at about $123 a share. Next up on the list, we have Tesla here, $652 a share. And remember, it was all the way down to $563 a share at one point. And I was reading an article, and this was on the bear list of the week. So definitely be watching for Tesla to go as low as $500, $550, $590 again, and be loading up on Tesla. That's what I'm going to be doing, especially if it hits $550 is my price point where I'm going to be buying pretty heavy. And if it hits $450, then I'm going to definitely be loading the boat because the last resistance is about $400. And with a lot of bad news going around, it can definitely push them into the $500 range. So watch out for that. This was the thing that the article was talking about. Chinese military reportedly restricts use of Tesla cars amongst personnel. China is restricting the use of Tesla's electric vehicles by some state and military personnel, according to the Wall Street Journal. The country reportedly cited national security concerns. Tesla's China makers have had an increasing role on companies' deliveries and productions. So remember, guys, they have a whole factory in China, and China doesn't want an American company to come in to China and take over their market, especially with a huge growing industry like electric vehicles. That's why they're backing NIO so much. You see them more often backing NIOs because they're a China-based company and they want that money and to stay in the China economy. They don't want to give it over to the American economy. So they're going to be doing China's going to be doing every little thing they can to hinder Tesla from competing and taking majority share of the electric vehicle space. But obviously, you guys know how I feel about long-term on Tesla. So this is going to be a hold for at least 1 to 2 years. I'm probably going to be holding 3 to 5 years. But if I can buy at 500, 400, 550, I can probably swing trade some up to about $900 a share. I think about $850 to $900 is a good price point, especially if it goes up that quick in 3 to 6 months as a swing trade. Now, the next one we have on the list is ticker symbol NIO, N-I-O, same as the company's name, and it's up 4% in the last day, but down still 5% in the last week. Still down 22% in the last month, guys. So whenever you say a big stock like NIO down 20% or 30% in the last month, especially in 1 month, that's a great buying opportunity, in my opinion. Now, from their all-time high, they are down about 30%. And in my opinion, they can easily get back to $60 a share in the next 3 to 6 months. All right. So what I'm going to be doing is buying under 40, maybe even under 45 is probably a good buy, especially if you're more of a longer term mindset. If you have a shorter term mindset, then you probably want to be buying as cheap as possible, like 40, 35. If it does get that low again, I'm not saying it will, because remember, it did bottom out at about 35. So in my opinion, under 45 to 40 is a great position to buy NIO, and you can swing trade it up all the way to $60 a share is my exit point, or even $65 a share. But if you plan to hold it for long term, which is where the real money is going to be at with NIO, because like we just talked about with Tesla, NIO is going to be the leader in China if Tesla's not. NIO's definitely going to be number 2. So how it's going to be in China, it's either going to be Tesla or NIO taking most of the shares for the EV sector. And it might be NIO just because the government backs them up so much and they're doing everything they can to hurt Tesla in China. So keep that in mind. This is a great long-term hold. Also, I have about $1,000 at an average cost of 46, and I'm going to be looking to add to my position, especially if it goes below 40. I'm looking to probably double this position for a long-term hold. But if it swings trades up to $60 a share in the next, 3 months, then I'll probably be taking profits if it does go up very quickly and makes moves suddenly. Now, the next one on the list is another EV vehicle company, and it's XPEV or XPing, if you want to call it by the ticker or the business name, and it's up 7%. We've been talking about this one for the last 2 weeks, guys. We're already up 20% on it. I have about, I think, over $2,000 in XPEV between all my accounts. So if you are following the channel, you probably have stocked up on this one and made some great money on it. Also, I've been telling you guys to buy this one since it was around $30 a share. And I think under $40 a share is still a great time to buy this one, especially if you have a mindset to hold for long term. And if you end up making money in the short term, then go ahead and sell it. But look, you want to have a mindset on long term with this one, because I think that it can go back up to $60 a share, $70 a share. It's just going to take some time, maybe like 3 to 6 months, in my opinion. And I think this is going to be a great Chinese EV sector also. So they're going to be right under NIO. I mean, NIO is probably going to take majority, obviously like 50%. But I think XPEV still can have like 20% share of the market. and it's a newer one, so you definitely want to get in now before it explodes. The market cap is 30 billion though, right? So 30 billion is still a huge market cap. And for it to double, that means it has to go to $60 billion worth company. And if we look at something like Neo, for example, they're at $71 billion company, right? So for XPEV to double, they basically have to be at where Neo's at right now. So definitely be a little bit more cautious on this one. This one can be a little bit more risky. If you don't have as much tolerance to risk, you might want to wait until it goes below 35 or even below 30 so you can load up on another dip, which is definitely possible for XPEV to see another dip, especially if Neo and Tesla start to take hits. I think the rest of the EV sector will take hits also. Next up, we have Lemonade, which is a great one in my opinion to be buying under $100 a share. So it's right in the buy zone currently. Down 33% in the last month, guys. Wow. And from its all-time high, look at that, still down 45%. This is a great growth stock that got hammered absolutely hard. I have an average cost of $95 with $1,100 of market value, up already 4%. Their market cap is only a $6.8 billion market cap. So I think they can get back to that $10 billion market cap range. I think that's pretty much where they belong. And in the next few years, I think they're going to have extreme growth as they get bigger and bigger and bigger, because right now they're only doing like a few select things. Like I think it's like renters insurance and a few other things, but I think they'll start expanding to other sectors in the insurance umbrella. So definitely one that you should be watching out for. Look how sharply they fell just in, how long was this? In about less than a month, they fell 42%. 47%. So it's one that you want to take advantage of. What do I always tell you guys? Buy the dip, buy the dip, buy the dip. It's one of the best things you can do in the stock market. I have a lot of people that message me, like for example, when Lemonade is at $160, $180 a share, that's when they want to be buying Lemonade, right? At an all-time high. A lot of you guys always like to be buying at all-time highs. And as soon as the stock drops 40, 50%, all of a sudden nobody wants to buy it anymore. So you literally need to reverse your thinking and stop buying at 52-week highs and buy great companies, great growth companies when they hit a huge fall or a huge dip like Lemonade has. Now, next up on the list, we have Fastly, ticker symbol FSLY. Kathy Woods is still invested in this one. It's down 6%, by the way, in the week. Down 18% still in the past month, and at one point was down almost 30%, right? So from its all-time high, it currently is down about 45% or more. And look at this one. Look at it. It follows a very similar pattern. So what you'll see, the support, it goes down to about 78. Here it goes down to 75. Here it goes down to 76. Here it goes down to about 60, 70, 65 in that area. And then look, it hits that $65, $62 support again. And what happens every time it hits a support? It goes up to about 111. Here's the support. It always went back up to 128. Here's the support. It went back up. So every time it dips, consistently for the last about year now, 1, 2, 3, 4, 5. 5 times it's already done this pattern. Every time it dips, it goes back up significantly. So this is a one I'm going to be putting a lot of money in for a swing trade personally. Right at under 70, between 70 and 65 is really where I want to be adding a lot of money. And my average cost is about 68, and I already have $820 of market value, and I'm going to be adding more. I probably want to double that if it goes below 65, because this is a swing trade that I'm pretty confident in, and this is one that I might even want to take an option out on, especially if we start seeing some upward momentum, because we can see this stock rally all the way up to 115 to 125 in my opinion. So that would be almost about an 80% gain, 70 to 80% gain. And I'm looking really for anything above a 50% gain in the next few months on Fastly. Now, the next one on the list is CCIV, Churchill Capital, and we know what's going on with them. They're going to be merging into Lucid Motors soon, so the official name and the ticker and everything will be changing soon, so be prepared for that. It skyrocketed off of rumors to about $58. The last month, it's down 51% after the confirmation has taken place. So if you ever heard of the term, it's called buy the rumor, sell the news. So this was a perfect example of buy the rumor, sell the news, because as soon as the news hit, down 51%. And they had some other drama going on because they're not going to be hitting the numbers or anywhere close to what they said and stated in the past. Also, they're going to be delaying production a very long time. I think like 6 months. They're going to be delaying production from when they said that they're going to start making the Lucid Airs. So in my opinion, this is definitely a riskier one on the list. But I think if you're buying closer to $22 a share or even $15 a share, if you can get that low, and if it does get to $15 a share, definitely be buying some shares at that point, because I think it's well worth the risk, about $15 to $25 a share. Now, I know that's a big gap. So whenever there's a gap like that, remember when I put 15 to 25, that means that you're buying slowly at 25, buying slowly at 25, buying slowly, buying a little bit heavier at 20. And then when it gets to 15, if it does, that's when you start buying the heaviest. So when you put a range like that, the lower number you buy heavier, the higher number you buy a little bit slower and a little bit lighter. All right, the next one on the list that everyone wants me to talk about is Disney, DIS, ticker symbol, and it's down about 4% in the week, guys, which is actually pretty big for Disney because they've been on such a hot streak. And from the all-time high, they're down about 5.2%. But if we go to the 3 months, they're still up 12%. If we go to last year, they're up 100% in the last year. This is one I was telling you guys to buy at about $120 a share. So I'm sorry if you guys did miss out. But everyone's wondering what's going to be happening with the markets with Disney because the parks are reopening. Disneyland, Disney World is reopening. So everyone thinks it's going to absolutely spike their business. But I think, honestly, a lot of that's already baked in, because if we look at their 5-year growth, look how much they've actually shot up, right? About 102%. And even at their all-time high when all the parks were open and everything was good in November 2019, they were at $151 a share when all the parks were reopened. So to grow from 151 to 191, that was really the Disney Plus subscription model that launched them to that 191. So I don't think that they will go much higher than $200 for a long time. I think they've had majority of their growth in the last year. It's already been baked in because everyone knows that the parks are going to be opening back up and they weren't going to be hindered for the long term. Disney's going to be around for the next 50 to 100 years, guys. Disney is one of those companies that it's just going to be around forever. No one's going to touch it. The stories, the movies, they're all too timeless. Disneyland, Disney World is very timeless. It's going to be around for a long time. But with the Disney Plus, I think that this one, if you are going to be buying, honestly, I would wait for at least 165, right? And that's if you are holding for long term. I would only be buying at 165 if you plan on holding for like 2 to 3, 5 years, right? So I would not advise, personally, I should say, I'm not going to be buying at $190 a share. Just doesn't make sense for me. I mean, buying a company at an all-time high that's just gone up 180% when they're a very established company, and in, 5 years, they've gone up 39%. From its very low to its very high, it's gone up 57% in the last 4 years, right? So this is a company that doesn't really experience so much growth like this. And the main reason they are is because the Disney Plus is really what's taking them off right now. But I think a lot of the growth has already been accounted for. Unless they start passing Netflix in subscriptions, then I can see them going up to $300 a share, $250. But I think that they will be going down to about $165 before they go up. Now, next up, we have Palantir down 10% in the week. And if we go to the month, they're only down 2% last 3 months, down 2% from their all-time high. They're down about 35%. So we have a great buying opportunity. In my opinion, this one's a little bit more of a riskier one that's on the list. They haven't proven as much as some of the other ones on the list have. They just IPO'd, in the last 6 months about, and they IPO'd at about $10 a share, and now they're at 24. So in my opinion, you want to be buying this one at around $20 to $24 a share, and you want to be swing trading it to a new all-time high, or at least to about $35 a share. And I think it can get to that price point in the next 3 to 6 months. So just be a little bit patient with this one. They're still new, and they can go down even to like $15 a share. So just remember, they are a little bit more risky. So guys, that is the video. I hope you did enjoy it. Smack a thumbs up on the video if you did enjoy it and you want more content like this. I know the Sunday videos are the best for you guys because you like to see what I'm buying in at, what I'm selling at, what stocks I'm looking at, and I can kind of engage with you guys on what stocks you want me to talk about. Now, I'm up 94% in the last year, so if your graph and chart doesn't really look like this, go ahead and reach out to me on Instagram, because I am taking a few more people as students, so you can actually learn from me and see what stocks I'm buying at the price points I'm buying it, at the time I'm buying it. So if I'm buying a stock, for example, if I buy $100 of Apple, I'll put on my close friend story, just bought $100 of Apple, looking to exit at this price point, looking to hold for this long too. So if you need more help and some of your friends or families aren't in the stock market, but you want to get to that next level and become more of an experienced trader, now's the time to do it. The stimulus checks are here and they're still coming. So the market's going to be pumped full of stimulus money in the next 2 to 3 months. Is going to be very bullish, in my opinion, for the stock market. So guys, share it with a friend. Share this video with a friend if you found some valuable information, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.